Hello, it's Adrian from Trend Signal here. Welcome to this week's market news video for the week starting the 10th of July 2017. A bit of a recap over the last week or so before we talk about the coming week here. So the market suffered a further bout of taper tantrum on Thursday, but the effects are largely contained for now. Sterling markets were knocked by poor data, but the currency continues to show resilience as traders prepare for a possible or probable rate rise. The tune from central bankers has changed over the past 3 weeks as one after another banker are emboldened to make more hawkish comments re monetary stimulus. The effects in the FX markets are negated largely as most G7 currencies are affected the same way. What this is effectively leading to is a number of sideways markets over the past week or so. The euro continues to strengthen as hedge funds and traders build bullish bets. Data last week from the US was positive, with both manufacturing and service PMI beating consensus. And the main events of last week also saw the NFP number. Let me just move to last week here. Saw the non-farm payroll number here. Where are we? There, beating expectations there. So we were expecting 175,000 new jobs created. We came in at 222,000, which reversed last month's miss on the downside. The positive data Friday helped those US markets recover their poise after a sharp fall on Thursday. Data this week, however, is relatively thin on the ground, and in fact, if you look at the Forex Factory for the high-impact items, there's actually nothing now until Wednesday there. The key event is undoubtedly Janet Yellen's semi-annual policy report to Congress on Wednesday and Thursday. Now, the text for each address is released 90 minutes before the statement, so the reaction is likely to start then. However, responses to questions during the address may also add a little bit of extra spice to the markets there too. You know, Yellen has turned more hawkish of late, so traders will be keen to see whether Yellen backs up her view on inflation and rate rises and the Fed's plans to unwind its balance sheet. The G20, whilst they managed to issue a unanimous communique, was not the success that Angela Merkel made out. Trump's America First policy has caused tensions that were all too apparent. With the US pulling out of the Paris Accord on climate change, the rest of the G19 confirmed their commitment. Probably one of the winners was at G20 was Theresa May, who concluded positive discussions with Trump on a trade agreement, albeit one that cannot be negotiated until Brexit is concluded. Trump continues his overseas trip this week as he travels to France to meet Macron and attend the Bastille Day celebrations. The week data concludes on Friday with the release of the US inflation data and retail sales, the former attracting more attention than usual in the wake of Yellen's testimony the previous day. Retail sales are expected to rebound to plus 0.2% from last month's disappointing data. Q2 US earnings season, on the other hand, all kicks off this week with banks releasing their quarter's results. JP Morgan Chase, Wells Fargo, Citigroup, they're among the main ones releasing this week. As with previous earnings seasons, brokers tend to downgrade results ahead of the releases, so markets are prepared but are expecting better. That's it really for this week. Have a great week's trading. We'll be back for more of the same on the 17th of July, but until then, happy trading.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.